Hello and welcome to Stockwatch, presented by me, Evan Lucas, for Go Market Securities. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature. None of which relied upon as any form of personal advice. Go Market Securities does not know your personal scenario, nor your personal financial goals, and therefore none of which relied upon as any form of advice at all. Is just general in nature only. Fortescue Metals, always an interesting one to watch, considering it is almost that pure play into China, and we know that. It's been telling us that for a while. Delivered a net profit after tax of 2.4 or 2.368, if you want to be exact, $billion in US. Earnings per share at 77 US cents. Underlying EBITDA came in at 4.3. This was a little bit below expectation, which was 4.7. The operation expenditure was also up because of Fortescue Future Industries. Don't forget, the green industry division of their whole business is starting to be a little bit of a money sinkhole, and that's where it is also at. C1 costs, so that is the wet metric ton costs, $17.43, 14% higher compared to the prior period. Reflects the inflation pressures that they're feeling. Also probably explains why you've seen in the last week or so that FMG have actually started considering laying off staff. Overall shipments were at 96.9 megatons, which is reasonable. It's 3.8% megatons above the previous record. So they are doing well, but again, don't forget, FMG gets a ferrous content haircut. They are not producing at spot iron ore prices of 62. They're doing it at 55 and 58. So the cut is there. We know that China can at the moment continue to look for the high-end stuff because they have been in lockdown, and that also probably explains why, although they've now got their Shanghai trading arm, which did reasonably well, they're still not getting a whole number of products that are there. Now, they will tell you that they've got strong demand for their products, and that's good. The volatility that's been there hasn't really affected them. Inventories are okay, but overall, the robust steel production in China hasn't been as good as it has in the past, and the FMG result, although it's nice, is not the strongest one they've ever produced. How do you look at it? It's probably a middle of the road. It's an inline number. And again, at the moment, it's probably the operational cost side to watch on FMG rather than on the main thing they do, which is production.